Welcome to the Management Accounting and Costing module. Now, the objective of this module is to understand the key issues driving costing, driving production, driving stock valuation, and allowing you to make a determination as to how ultimately pricing decisions are made, whether you're in a manufacturing environment or whether you are in a service type of company. If I had to take you through the module outline, these are the areas we're going to cover. We're just going to kick off with the differentiation between financial accounting and management accounting. What's the difference between the two and the types of information that we get from those different forms of accounting? We're then going to do a bit of a background on the different cost types, and here I'm going to focus on fixed versus variable costs and why we treat those differently. The section following that will look at the need to allocate costs to different units of production. So what allocates do we allocate to a bottle of beer, a loaf of bread when we manufacture it? Then I'm going to look at various ways we can actually allocate costs. So practitioners in business talk about absorption costing, and we're going to cover that section quite thoroughly. And then we're going to look at something called variable costing, and we're going to cover that cost allocation process using variable costing quite thoroughly as well. The sixth section is going to look at cost volume profit analysis, sometimes referred to as flexed budgeting. I'm then going to introduce you to last in, first out, LIFO, and first in, first out, FIFO, what the contrast is between the two and how that impacts on inventory valuation. And then the last sections we're going to look at will relate to standard costing, contract or job costing, and activity-based costing. In the final section of this module, I'm just going to consider what services companies need to keep in mind when costing and applying these particular methodologies.